Great, amazing. Everybody that is joining us on the VetYou Facebook page, you should be starting to see us now. We are going to be chatting all things investments. We are thrilled to be joined yet again by the amazing Ruth Downs, who's a financial advisor. I am going to make sure that we are streaming into VSGD Careers as well, because again, I know that there is a real group full of people that are keen to hear about this as a topic. So I will quickly do this as swiftly as I can, and then we can get chatting to Ruth, because I know there have been plenty of questions that have come in, and I know we're really going to get some gems of information coming through about investments as well.
I'm looking forward to this one, Katie. It's going to be really good.
Too.
There's always a lot of interest around investments and how it works, and interest rates, etc.
Good. Well, we can ask plenty of questions and get some of your wisdom on that too. So I hopefully should have got us into VSGD Careers now as we speak. Amazing. Right, we
Yay.
are there. Super. Hello everybody in VSGD Careers. Hello everybody on the VetYou Facebook page as well. So we've done our tech side of things. We are here now live, or maybe you're catching up on the recording as well, which is also absolutely fine. We've been doing these 15-minute snippets on a Friday for Friday Finance, just to give you digestible financial education and some signposting too. And just as Ruth was saying there, one of our most requested topics is investments, and we know it's super important. Now, everybody watching this is probably at a different stage in their investment journey. Some people might be thinking, oh my God, what are they even talking about? And other people might have some sophisticated portfolios. So please bear with us, whichever stage that you're meeting us at. We're going to start with some absolute starting ground blocks and basics. And I'm going to start, Ruth, by asking you, what is an investment at its bare bones core definition? Like, what is an investment? What are we talking about here?
Okay, no, it's a great question. So an investment or investing, it's a long way from kind of putting in cash, or, in cash in a bank account where it sits to earn interest. Instead, you're taking kind of risk with your money in the hope that you'll make more than what you put in. But there's the possibility, as always, that you might end up with less. So you can invest almost anything, from the more mainstream, shares, bonds, and different, lots of different ways you can do it. Even a pension is a form of investment. So for most, investing tends to be putting money in the stock market.
So it's us putting our money somewhere that we hope that it's going to grow, whatever that might look like. And obviously, I know you're always really clear, especially being a financial professional, that you have to talk about the risks of that. And that's why you talk to people one-to-one on that as well. And I think you touched on it there as well, Ruth, but we're hearing a lot at the moment about inflation, and the inflation rates going up, and the interest that maybe we're getting on our savings isn't particularly high. And we've touched on this in a few of the webinars as well, but this means that investments are even more important than they've ever been, I guess, at the moment. Can you explain a little bit more around inflation, interest rates, and how all of that comes together in terms of our money keeping up with that?
Yeah, I'd love to. So it's really important that people understand inflation. So think of it like this. What if you were to go to the shop a year ago and you bought a basket of, say, bread, milk, sugar, eggs? What they do is they compare that basket a year ago to what it is today. And actually inflation has gone up by 9%. So that is a lot. So if you're paying, say, £1 for a basket now of goods a year ago, it'll now be worth £1 and say 9 pence. As we all know, I don't know about you, Katie, but my basket has gone up when I go to shop at the minute. So with it being 9%, I just want to put it in perspective, because this really helped bring it home for me. If you'd have invested in 2000, £10,000 in 2020, that even though you'd still have £10,000, the real purchasing power of that £10,000 would only be worth £6,554. Wow. So it would have lost 34% of its purchasing power. And it is a real danger that we could outlive our capital. So that is the kind of price of inflation.
Wow. And again, it just shows you, doesn't it? I guess if you've got that £10,000 and it sits in a bank account that is really easy access, probably very low interest, then yeah, in that even shorter than 22 years, I guess, at the moment, with how high inflation actually is, that it's kind of going down in value, isn't it? And that shows us why it can be really valuable. Maybe speaking to someone like yourself, Ruth, and saying, okay, where could I put this that there is a chance it might get a return, rather than sitting there at a much lower rate.
I mean, think about, do you know how much your bank account you're getting at the minute, just a current account? I can almost guarantee it'll be about 0.01%. That the rates that banks give you at the minute are very low. So you have to be mindful to make sure that you can try and get your money to at least keep pace with inflation, if not try and exceed it. But the way that you can do that is by investing. And usually, in the most common, a lot of people do is through a stocks and shares ISA. Not to be confused with a cash ISA, because cash ISA is a very low interest. But yeah, stocks and shares on the whole could give you the potential to earn more.
And that's something we'll come to as well. One of the key questions I've got is where to get started, which we'll come to when we've cleared up a little bit more around these key questions as well. So essentially, when we're talking about people investing this cash, we're looking at cash that they don't need to access immediately, aren't we? So we talk a lot at VetYou about, and with yourself as well, we having maybe a rainy day fund, an emergency fund, that backup fund. So we're not investing that cash into anything. We're more looking at, are we in a position where we've got some extra that's sat in savings that actually, if we do nothing with, potentially is just going down in value, isn't it?
100%. So I don't work like the typical financial advisors. I won't invest unless my clients have a comfort fund, also known rainy day. I've heard it called lots of different things as well, which I can't repeat on a live.
I think I know what you mean. Yeah.
But it is so important to have some form of comfort fund that you can fall back on should you need that for anything that may happen. And we've all had it. You know about my boiler story and it breaking down, and I needed, heating in the Christmas. Sorry, it was New Year's Day, not Christmas. Yeah. So it's for things like that. So we've got to make sure that we have that buffer.
Yeah. And again, that gives us peace of mind, doesn't it? It's one thing investing cash somewhere and then thinking, oh my goodness, I might not be able to access this as readily and as soon as I would have liked to do. And that's where, again, discussing your individual circumstances with someone like Ruth is really going to give you that perspective that, because we're not trained in this. Yes, we can educate ourselves to an extent, but Ruth's done all the exams, so we may as well come to someone like her and just say, look at my whole picture and
simplify it for me. Help. That's what I get a lot.
Yeah, that's it. And I guess one of the questions that probably comes up a lot, Ruth, is there a minimum amount to invest? Is it just for people that are sat there with like 10, 20 grand to invest somewhere? Or like, what would be your thoughts around that?
No, so as long as you've got the comfort fund, first of all, like you've said, for one-off deposits, you can kind of get started with just £1. That's it. If you wanted to do, more recurring ones as well, whether that be your monthly, £2, it can start off as a minimum of. So yeah, and there's lots of different ways that you can do it. So if you come with a financial advisor, they might have different minimums. I know for like an individual savings account, for me, like a stocks and shares ISA, it might be something like £50 to £75 because you're looking to get that advice. But if it's more something that you're searching yourself, then you can start for like £1 or something. And it's the same with investments. Like, you work with a great company, Raindrop, and their minimum is also £1 to put into a pension or something. Because I emailed them earlier and I went, can I double check this? And they went, yeah, it's you can start as a minimum. So many different options. And you guys have kindly, got a group together that can help provide that information.
I love that you can start with such a small amount. Isn't that good kind of for a mindset as well, over us taking those small actions every month and being able to say, look, I am someone that invests, versus holding fire until we feel like we've got that huge like pile of cash that, oh, okay, I've got to get to this much to do it. And I guess there'll be a few people that are watching this or watching the recording back and going, oh, you know what, maybe I do have a little bit spare that would sit there otherwise for a couple of years. I don't want it to lose funds. I want to put it somewhere. I want to start investing. Like, what's the first action step that they can take, Ruth?
First action is just decide to do something about it. So take that first step. Once you've done that, obviously you've done your due diligence on the people that you work with. So reach out to like someone like myself, like a trusted financial professional who can just guide you. A lot of my calls are just for, obviously they're complementary, and it's just guiding you in the right direction to put you on the right path, to maybe sort fact from fiction, myths from the truth of where you need to go, and to leave you. I mean, I can almost say I leave everyone better off than where I found them, because I give them that information of what they're worried about, and help relieve any stresses. So take the first step, have an introductory call, and reach out to someone who has spent years studying to do it, and within the job itself to guide you.
And I can definitely testify to that. Ruth always leaves you feeling better off.
I try.
She does. And again, I know you've helped over 200 professionals in the veterinary profession so far, and there's plenty more lined up. Ruth is, quite honestly, hand on heart, not like many advisors. She really just wants to help. And obviously
100%.
she's spoken to so many people in our profession as well now. She's not going to hard sell you something. She's just going to be what she calls you, your BFF, your best financial friend, and answer those questions that actually you head to Google and you see 15 different answers and you think, oh my God, which one's right, which one's wrong? So I know we've touched a little bit on this already, but when you start looking online, and I've seen a few posts around the community as well about things like, oh, you can just jump on an app and you can learn about it yourself and you can start investing in that way. What are kind of the pros and cons to working with an advisor versus saying, oh, you know what, I've heard there's an app that I can download and I can do this on there?
It's advice. So it's about, you can go on an app, but they won't tend to give you advice on it. It will just be a case of, I want to put X amount into this investment, and then they will help facilitate making that happen, but they don't guide you as to whether it's the right or the wrong thing. What if you came to me, for instance, is I would set you up on the path. I'd give you a couple of tools to get started, find out what you have coming in and going out, to make sure that you can afford to invest that. Because if you can't, I'm straight talking. And that's what my clients like, is that I will say to them, look, you can't at the minute, you need to just build that up a little bit further, get your comfort fund to a level. So it's about having, I don't know about you, I can't stand these automated press ones, do this, and and then it leads you to something else. You get an automated message. You don't. You get to speak to a person who will guide you on your circumstance, not on a general one, on your specific circumstances. And that is the main difference.
Yeah, and that's the bit that's worth its weight in gold, because like you say, there are apps and things that are out there, but actually if we all think it's just black or white, or A or B, or these two options, then we might end up with someone in a situation that goes to one of those and ends up losing out, because actually they put a lot of cash down, there's hidden fees you don't know. And actually, even if they can come to you, and one thing that, Ruth, you're fantastic at is just laying down options, saying, look, here are your options. I'm not going to force you into any of them, but we've taken this skyline view of everything that's going on for you as a professional, knowing all of the policies that maybe you do or don't have in place, your spending habits, and then we can help decide what's the best way to move forward. And I think the final thing I was going to ask, because I think we've covered so much in just 15 minutes here. We've covered what are investments, we've talked about inflation, we've talked about minimum amounts, where to start, why financial advisors are useful. There's a lot on the news at the moment about it being a recession, potentially a depression, and that stock markets are all over the place. Is now a time still to invest? Because I know this is a worry for a lot of people, and we've touched on this previously, but just if anyone's got that question, like, should I be investing right now when it's potentially an up and down market, when there's a lot of things going on?
Another reason to work with a financial advisor who you can have contact to. I mean, everyone I work with has my mobile. So if they have any concerns, like when I was visiting my mum in Cape Town, I had so many calls about, oh, this is happening and where's that going to leave us? I picked up the phone, I answered them, I gave them emails to give them that reassurance. It's the time that is spent in the market, not the timing of when you put your investment into it. So you've got to spend time in it. And I've got all the charts and the graphs to help show people, to visually represent it, because I'm a visual person, I like to see it. So yeah, to show you what that means and put it into perspective. So quite often when there's something really turbulent that's happening, some people class it as the best time to invest, because you're investing when the market is low.
Yeah.
Because then, you know, on history shows, usually after something happens, it goes back up again. Obviously, investments can go up as well as down, but obviously we have to caveat it by that. But it's having someone to speak to that can reassure you about those turbulent times.
Yeah. And again, we keep saying the value of good, professional, timely financial advice. We can't shout about it enough. So what we'll do is I'll pop the link for Ruth's Calendly in the comments under this video. So if anyone does want to jump in and have a chat with Ruth about your individual circumstances, she offers those completely complimentary. You can book in a time that suits you. You can book in a day that suits you. There's loads of availability there. Ruth is very kind in opening her diary up. You'll be asked a few questions, just a little bit of information. You'll see on there, we've got all sorts of bits that we run through, like where Ruth works, how that works with VetYou, a little bit more just in terms of, like, we've got a protection health check that we've been talking about, where you can screen, is my income protection policy for me at the moment, does it cover what it needs to cover? Or if you want to get income protection, you'll see all the information on that link. So take the opportunity, reach out. If you do have some cash that's sat there, absolutely, maybe it might be worth talking further about. If it's that you think it's more something I want to do in the future, but I'm not sure how to set myself up now for thinking about integrating that, again, have a chat to Ruth and just have your questions answered, and she'll help signpost you or help you find something that suits you as well. So I will pop all that information in the chat below. We'll be back here again on Friday next week. If there is anything particular that you would like us to cover finance wise, we will gladly jump on and make that a topic. We can do everything from, we can do pensions, critical illness cover, we can start looking more at saving habits, we can look at health insurance, life insurance, whatever it is that you want covering that we can use Ruth's phenomenal knowledge on, then please let us know in the chat below. So thank you so much for being here with us on this Friday Finance once more, and amazing. Ruth, you were fantastic once again. Thank you so much for sharing these 15 minutes with us and helping us gain a little bit more information about what investments actually are.
Good. I'm glad I can help. Thank you so much for asking. All right, see you.